Over the last 5 years, SunPharma has pulled off one of the most incredible transformations in the entire Indian pharmaceutical sector. So today, we're going to break down exactly how they shifted from being a generics maker into a real global specialty powerhouse. Okay, so here's how we're going to tackle this. First, we'll unpack what that transformation actually looked like. Then, we'll dive into the new growth engines that are fueling it, build out the bull case for the company, weigh that against the key risks, and finally, wrap it all up with a final verdict.
All right, first things first. The core idea we need to get across is that SunPharma's big strategic pivot, well, it's not something that's still in progress. For all intents and purposes, it's complete.
The company has basically built a bridge from its old world of commodity generics to a new one, a future built entirely on high-value, protected intellectual property. And this isn't just a simple shift in what they sell. It's like they've constructed a whole new competitive moat around their business. So the big question is, how did they pull it off? Let's take a closer look at the specific growth engines that really powered this whole transformation. At the heart of this pivot are two absolute blockbuster drugs, Ilumya and Cequa. Their growth has been nothing short of explosive. We're talking about multi-billion-dollar assets in dermatology and ophthalmology that together now make up nearly 20% of the company's entire revenue.
Now this is where it gets really interesting, because this chart shows the deliberate trade-off they made. Management made a very clear choice here. They sacrificed short-term generic volume, you can see that declining, to pour money into high-barrier R&D for new drugs. And that R&D spending, that rising green line, is now sitting at a pretty substantial 8 to 9% of their sales.
And you might be wondering, how did they afford all this? Well, this whole transformation was financed by an incredibly powerful base. SunPharma has a dominant 8.5% share of the Indian domestic market, and because it's heavily focused on chronic therapies, it provides this steady, almost recession-proof stream of cash to fund their global ambitions.
This is a brilliant illustration of their unique global strategy, what you could call a dual-engine model. You've got the value engine in India, just providing that rock-solid stability, while the high-octane growth engine in the US is really driving the expansion. It's a really powerful structure that, frankly, very few of their peers have been able to copy.
So, with that foundation solidly in place, let's actually build the bull case. What are the main arguments for why this growth story is far from over? The bull case really hinges on this number right here, a projected 15% compound annual growth rate in their specialty portfolio all the way through 2028. That just smashes the industry average. And this isn't just wishful thinking. It's backed up by recent regulatory clearances and a really strong net cash position. That means they have the firepower to go out and make a major acquisition.
But of course, no analysis is complete if you don't look at the other side of the coin. So now let's turn to the bear case and talk about the risks.
The risks are mostly centered on the US market, and they really fall into three main buckets. First, you've got potential legislative scrutiny on drug prices. Second, there's always rebate pressure from those big pharmacy benefit managers, or PBMs. And third, the ever-present risk in this business, a major clinical trial could fail.
So, we've laid out the strong bull arguments, and we've looked at those notable risks. What's the final takeaway when you put it all together?
The whole thing really comes down to valuation. SunPharma trades at a premium, a price-to-earnings ratio of 32, which, yes, is higher than its peers. But the core argument here is that investors are willing to pay up for Sun because its new business model is just less risky and generates a much higher return on equity. In other words, it's just more profitable with the money it has.
So, the final verdict? SunPharma is now looked at as a classic compounder. That's a company that can consistently reinvest its profits to generate even more growth over the long haul. It's really become a core holding for long-term investors, mainly because the successful shift to specialty drugs has created a much higher and more stable floor for the stock.
And this leaves us with one last big-picture thought. SunPharma's successful pivot from volume to value isn't just a story about one company. It really raises a much larger question for the entire pharmaceutical sector. Is this the new blueprint for how to survive and grow in the years ahead?